Today on the Rebel's Edge, don't say we didn't tell you. If you read our AI research report that came out in December, you would not have been terribly surprised to hear about Project Stargate, massive investment in the continued explosion of AI data centers and part of Trump's Manhattan Project 2.0. Netflix and chill? I don't think so, folks. It's Netflix and party. Netflix reaching all-time highs on news that it continues to dominate the streaming wars. And hedgies are backing up the truck, borrowing at rates not seen since 2010, meaning they are getting levered as a means to continue to fuel what we believe will be a continuation of this bull run. All of that and more on today's Rebel's Edge.
Here we go, Marc. It's great to see you. For the people who don't know who Marc is, the CEO of this wonderful franchise that we've got. It's phenomenal. And where is John? Well, that's always a great question. At this particular juncture, he's out skiing in France or God knows what, but he's always up to something, Marc. It's always fun. He always has a good time. And he kind of checks in every once in a while.
I think I figured out how to monetize this, Pete. And we're going to do a children's pop-up book. Where is Dr. J? Where in the world is Dr. J? And it could be sort of a choose-your-own adventure. Well, hey, listen, I have not been on the edge in 2025, so I'm very happy to be back on here with you. And quick programming note, I will be coming to you on the edge as well tomorrow, Thursday, but I'm going to be in Cardone Studios in sunny Florida because, damn it, it is cold up here.
You guys don't know what cold is. Yesterday, and I say this as a true Minnesotan, it was minus 35. So tell me, I don't know, were you guys anywhere close to that? You were probably 50, 60 degrees warmer than that.
Are you using the same measurement of temperature there? Because that's just not possible.
Yeah, it is possible. It's Minnesota. That's what they do here. Although we've got a huge heat wave coming through and we're actually above zero today. So it's going to be a magical day for us here in Minnesota. All right. Speaking of magical, let's get after it with some macro minute. I'm going to jump in right away and talk about this because I think it's that important. Earnings. Now, we talked about last week, going into last week, and on the Rebel's Edge, we talked about the financial earnings, what a big deal it is. That kicks it all off. Well, that kicked it off, and it did an unbelievable job. The banks, the financials, however you want to display it, is phenomenal. Now, what are we looking at? Well, Netflix, we'll be talking about that a little bit more in depth. 3M, D.R. Horton, Seagate, J&J. We've got tomorrow, we've got Texas Instruments, we've got GE, we've got Freeport Mac. I mean, it is earnings, and they are flying. And Marc, so far, so good. They have been absolutely ripping and delivering just as we would hope for, but they're actually coming through with that.
Yeah, and listen, as we covered in our January 2nd kickoff webinar, that was one of the things that was an essential ingredient to the continuation of the 2025 bull run. And yes, so far, this earnings season is not disappointing. My macro is definitely the hedge fund story. And Pete, for loyal watchers and listeners of this and Cocktail Hour and our live events, folks know I love to maintain relationships and comms with my friends on the prime brokerage desks, the guys that trade for the biggest hedge funds in the world, to hear what's going on. And what's going on, I'll tell you what's going on. Hedge funds are positioning their strategies for continuation of the Trump-catalyzed bull run by ramping up borrowing leverage to the highest levels in 5 years since 2020. They're betting on the continuing rise of the dollar. They're betting on the continued tech rally. And that is a really interesting thing. When hedge funds, those largest of the large money managers, are borrowing at that rate to place these kind of bets, it tells you that bull run has plenty of fuel in the tank to continue.
Yep. They're levering up, so to speak. All right, Marc, We're going to go to the fantastic futures, and they are fantastic. And here's what I'm looking at today. The 10-year. On January 2nd, we were at 4.57. It was not too long ago we were sitting at 4.8 for the 10-year. And now we're right back at 4.57. That, I think, is a good thing. That is why I think we're seeing the NASDAQ really have a really extra boost. Obviously, not hurt at all by Netflix and some of the other names, but nonetheless, I think that is also a big boost for many of those NASDAQ names. And we're watching the NASDAQ just absolutely rip today. Volatility, that's always my thing. And I'm into it today because we're at a 1 month low. We're sitting right there in the 15s, the very low 15s mark. I think what's really interesting is just yesterday, our friend, our colleague, our somebody, whoever he or she is, 50 Cent is back and bought, I don't know, 50,000 of the April 35.70 call spread there, looking for a big jump in volatility at some point here, giving a little bit of time going out to April. That's pretty interesting. And what did they pay for it? Well, just a little over 50 cents. That's why I say I think that's who it was.
Yeah, I saw that paper or that print, as we refer to it yesterday, Pete. It did cross my mind as to whether or not it was fitty. But what was more interesting to me was the bet itself. We have been talking consistently in our services and cocktail hour and such that this bull run will not be a straight, up and to the right type of a chart. There will be a pullback. Steve Kalasian from the Rebel Setup has talked about it coming sometime in the beginning, early part of the second quarter. That would seem to be consistent with this massive, massive bet. So interesting. Yeah, that was tempting for me to follow suit. Haven't pulled the trigger yet. My fantastic future, Pete, is that sweet, sweet liquid gold. And listen, man, between drill, baby drill, between Trump saying we're going to refill the spur and demand looking like what it's going to be in terms of increased industrial production with Trump's pro-business policies, oil's just too damn cheap at 75, right? We saw it on the spur news, hit 80 before a little bit of a pullback, but just basic back of the napkin math, even if we're talking just about refilling the spur, I could see oil getting back up to 80 pretty quickly. And we're seeing some of, and I love this, I love being right, and I love talking about it with our audience, and we talked about it even as far back as November at the Rebel Mastermind. Drill, baby, drill. If it brings oil prices down because of excess supply, who do you want to be invested in? You want to be invested in the midstream players and the guys that are oil field services because they don't care as long as stuff's flowing and blowing and there's more product moving around. They do well. And which one of our favorites in the midstream space hit an all-time high today at 21? Oh, I don't know. ET, Energy Transfer, that also pays that sweet quarterly dividend. That is an absolute mainstay of my portfolio. And if we followed us when we talked about it at the Mastermind, and it was around 17.90, 18 bucks, you're probably pretty damn happy. And I think that's going to continue.
And I'm a huge fan of Landmine. Anyway, I think it's all good.
By the way, I got to add, we also, and I noticed this after I made my show note to talk about ET and the oil futures, we had paper in it today as well. We had people buying, I think it was the March 23s, but I'll confirm that while you get into the first name.
Sure. All right, we're going to kick it off with Netflix then. And why wouldn't we? That was the biggie. That's what everybody was waiting for last night. We got the delivery. Wow, did they ever deliver? All they've done so far today is hit all-time highs, Mark. They're up over 13%. They reported, of course, last night, but look at that spike. Got all the way up to $9.99. They did not get over 1,000. But a $15 billion share repurchase, I would say that's going to help a little bit. Matter of fact, over the last few quarters, we've been talking about these repurchase numbers. They're first of all, they're outrageously large, and Netflix is absolutely embracing that whole thing. Their earnings, they're beat. Their revenue, they beat. They only added 18.91 billion paid subscribers, streamers, when they were actually looking, Mark, for 9.18. And so they doubled it. And, you look at that and you go, wow, year over year, it's up 15.9%. They added the price hikes. People didn't seem to care. At least investors didn't seem to care. And my guess would be most of these newer buyers that are part of it, they're okay throwing in another buck or two, Mark. I don't think they're going to shy away from that at all. The volume is outrageous. And this is a stock that's been ripping. And anybody who's been watching it fully understands. They got aggressive with all those people who were sharing and everything else. That was smart. Now they've got them as subscribers. Netflix is they're really ripping in the right direction right now.
Yeah, Pete, there's no doubt, and it's a very, very interesting story. I mean, one, it does appear that the streaming wars may be approaching a clear winner. I think it's Netflix, and it's interesting. You mentioned Landman, which I love as well, and has got a tremendous ratings and tremendous viewership. Yet Netflix, with the arguably does not have the same, or at least currently the same type of content that is as popular. They're winning on the business model, right? They approach these changes not only to the password sharing, but to the pricing. What are people willing to pay? Are they willing to pay for ad support? Are they willing? They made some pretty bold bets. They got it right. They continue to dominate, and they're going to be pretty damn hard to catch up. I would not be betting against Netflix as we continue through this year. So that's why I said it ain't Netflix and chill. It's Netflix and party if you're a Netflix shareholder.
Yeah, that whole thing of adding the money and this, that, and the other, the commercials and everything else. I'll tell you what, they were right to finally do that. And that was something they pushed away from for many, many years until they finally decided, let's give it a shot. All right. Agilysys is a hospitality software company. It's interesting, Mark, because this is one of those where they beat on the earnings by a pretty substantial amount, actually, 38 cents over 34, but they missed on the revenue. And unfortunately, the miss on the revenue was pretty large. They put up 69 million. They were looking for 73 million. This is a stock under some serious pressure today. It's down about 20%. The balance sheet, by the way, in my opinion, does not look great. It's not a high short interest or something, but I don't like what the numbers look like when you add it all up. The biggest problem, though, coming out of this is the fact that they unfortunately gave the revenue guidance and it was below what was expected. And that's never a good thing. That's always been that trigger. You can do whatever you did last quarter, and that does matter a lot. But what matters the most is, what does it look like in the future? The CFO himself came out and talked about the challenges that they're facing and all the rest of it, Mark. That's never good when they've got to do that. And that just tells me that things are not really going very well. This is one of those names where on this pullback, 20%, I have no interest in buying at all.
No, I totally agree with that, Pete, particularly when you put this news against the backdrop of what the street's overall outlook for the hospitality sector is for 2025. And it's pretty darn good. Almost unanimously anticipating among the analysts that follow the sector, 3.5 to 4.5, even 5% growth in top line revenue across the hospitality sector. We saw even continuation of that from some of the airlines that have already reported earnings this season. So if the rest of your sector is doing well and you're struggling that much, it actually gives me even more cause for concern. This is a no touch for me.
Yeah, I'm with you on that. How about SoftBank? You sort of edged up a little bit against that at the very beginning of the show. And that's one, I think it's really interesting when the CEO of SoftBank comes out and says, you know what, $100 billion, sure, we're in. They're in for $100 billion. They're looking to put up $500 billion, but they just jumped in with the $100 billion. You've got Oracle, you've got NVIDIA, you've got Microsoft, you got ARM, all of these, Stargate, everybody's all excited about this. We've been talking about this build out for a long time, the infrastructure project that they've been moving for. And the president, very excited about what's going on. Mark, what do you think about this one? SoftBank is up about 11% on this announcement. I think that's probably the right reaction for where they are right now. What about you?
Yeah, listen, I totally agree. And we got to, Pete, we got to take a little bit of a victory lap on this one. As you know, we worked hard, Justin Nugent and myself, to get that AI energy research report out. We published it in December. We predicted exactly this kind of activity around the continued growth and explosion of data centers, the need for investment in data center infrastructure, what it's going to create in terms of an energy crisis. And what was the first executive order that Trump signed after he was inaugurated on Monday? Declaring an energy emergency in this country. When Marc Rebellion gets it right, we really get it right. And yes, I think there is good reason for investors to applaud SoftBank's participation in Project Stargate, which is this sweeping public-private collaboration to do what? To expand data center capacity. It's part of President Trump's larger plan to dominate not only in the AI infrastructure space, but in AI itself. That's going to be covered in a report that we're going to be publishing at the end of the week this week as a follow-up to the one we did in December. So if you didn't download it, you can head on over to marketrebellion.com. It's absolutely free. And perhaps producer Jared will pull up the QR code. Just really quickly, Pete, before we move on that, just an energy transfer follow-up. I indicated that we had paper in it today. We did, even though the stock is at an all-time high, hitting 21 on the Spur News and other bullish catalysts in the oil and gas sector. We had investors coming in, snapping up 5,600 of the February 22 50s in ET, Energy Transfer. So that puppy looks like it's going to keep going higher.
Somebody really likes it. There's no doubt about that. You know what else somebody likes? And I think it might have been the president. Did he end up getting one of those things on the whole energy thing that you and Justin worked so hard on? We should go back and look and see if he did, because I wouldn't doubt it. I'll tell you that. All right. Last one up is Travelers. This is pretty interesting because we're kind of going into that weird world of financial insurance and all the rest of it. And did they do pretty well? I'd say that they did better than pretty well. When you look at their earnings numbers, absolutely outrageous. When you look at the revenue numbers, 12 billion over 10.9 billion year over year, that's another big growth story there. Everywhere you looked in this particular delivery of their earnings, unreal, Mark. I mean, I look at the net incomes up 28%. This is Travelers. We're not, this isn't just some startup or anything like that. This is a tried and true financial that's been around for a really long time. Higher insurance premiums as well. I mean, everywhere I look, I'm like, well, I don't see one negative thing about this at all. I think this is an unbelievable report that they were able to put up there. If you look, this is a stock that just kind of grinds along at a pretty nice pace, though. Over the year, 52 weeks, they're up 17%. I don't think you're all that worried about Travelers when you're holding on to something like that. They've done a great job of navigating. The last 6 months, they're up over 22%. Year to date already this year, up 4%. They've really done a nice job. They did everything that you'd want out of an earnings report from what they were doing. It looks incredible. Do you feel the same way?
I do. And, it's an interesting juxtaposition against the backdrop of all of the talk and the controversy, particularly in the property and casualty sector of the insurance industry, against the backdrop of the Florida hurricanes, of course, the California wildfires, insurers, dropping coverage and creating insurance deserts in many places because of the risk from natural disasters, fires and floods. And so it's interesting to see how that will play out. Travelers largely avoiding any significant impact from that. Well, the insureds might say, well, yeah, no shit, Mark. They increase premiums and they're not paying. So when you do that, it's pretty easy. You got no money going out the door. All the money's coming in. But the other thing that's very interesting, and you mentioned this not just as an insurer, but as a financial name, and you're dead right about that, Pete, 23% of their earnings coming from investment income was almost $1 billion. So, that doesn't hurt to overall improve the view of your balance sheet when everything else is going right as well. I just personally, the insurance sector in general is a little too messy for me. So this is not a name I have in my portfolio.
Yeah, I'm with you. It's not in mine. It probably should be, though. Honestly, I kick myself every year for not having some investment in there because they just literally just kind of keep on moving along and keep on moving along. It's pretty daggone impressive. All right, we're going to jump to a little bit of sports. Now, you and I both have our favorite teams and everything else in the NFL. And unfortunately for you right now, I would say that when I say that there's more parity in the NFL, I truly mean it. But there are some outliers, right? I mean, the Jets have struggled for a while, and I know you're a big fan of them. And I feel bad that they haven't been able to make that turn. But that is part of it all. But I would say this, the NFL and the fact that there is a lot of parity. And here's a great example of that. I'm looking at the Washington Commanders, right? They got new ownership. They got a new coach. They went into the draft because they were so bad. They had the second pick in the draft. It was not because of trades or anything else. They were that bad. They only won 4 games last year. They get a guy named Jaden Daniels. They hire the right coach, Dan Quinn, who's a defensive-minded coach, who, by the way, they had the worst defense in the NFL in 2023-24 season, right? Now in the 2024-25, they're in the top 6 in just about every category there is on the defensive side. I'd say that coach has kind of figured things out. They drafted well. They got free agents. They also drafted a young man by the name of Jaden Daniels. People should know who he is because he might be the best rookie quarterback numbers-wise we've ever seen in the NFL. And the opportunity was there, and that's where the parity comes into play because Now they've got 12 wins. The kid's only a 70% completion guy, 25 touchdowns, 9 interceptions. He threw for 3,600 yards. And oh, by the way, he led the team in rushing as well, Mark. So that, I think, just says a lot about why the NFL is the number one sport in the United States. I mean, it's absolutely incredible. Then you've got Patrick Mahomes and all of the history that he's already had. He's only 29 years old. This is going to be, if he gets there, it'll be his 6th Super Bowl already. They've won 2 in a row, and now they're looking for a three-peat. I think Josh Allen takes them out, but I think what I wanted to ask you is, why don't the other sports teams understand what they're doing in the NFL that I think helps the viewership, right? I mean, you don't want to always look at the guys who are 3-14 every year. They stink it up and all the rest of it. You have a nice change all the time, I think, in the NFL. Sure, there's certain teams that are always there, but there's always those outliers, right? Detroit turned into one of those. Now you've got Washington's turned into one of those. So I just wonder, why is it the rest of these sports haven't figured this out, do you think?
Oh, listen, I think it's as much about the nature of the sport as it is anything else, Pete. I mean, why did baseball adopt the shot clock? Right? Because they were losing viewers. They were losing people, asses in seats as well as eyeballs on screens, because nobody wants to sit there and watch paint dry and grass grow. And the reality of it is, football, by and large, is a pretty darn fast-paced game. It keeps your attention, and the more the American psyche becomes more ADD, which of course is unfortunately the case thanks to TikTok and other types of degenerative social media, I'll refer to it. The sports that keep the action going is football. And look, hockey never quite caught on. One might say, well, hockey is very fast-paced and action-packed, and it surely is, but it never quite got the popularity here in this country that it does with our neighbors to the north. Football is a very American game, and I think it has more to do with that, frankly speaking, than anything else. And I have 2 questions for you with the Super Bowl fast approaching. 2, number 1, where will you be watching? Will you be hosting your own Super Bowl party, as I know you've done in the past? And 2, who do you like? Who do you think we're going to see take the crown this year?
Yeah, I tell you what, it's really difficult. I look to the AFC because the NFC is interesting, but I think the AFC continues to kind of dominate like they have been for the most part, and obviously that starts with Kansas City. I think this year Buffalo actually takes out Kansas City. I think Josh Allen finally gets over that hoop. Now, when I say that, the strength this year in Kansas City was more so their defense than their offense, and which is interesting because it's a Patrick Mahomes team, but they just weren't the same team that they've been, the exciting team they've been, and I really like what I see out of Buffalo. But, that's been a tough one, so they're going to have to get past them, and it's obviously at Kansas City. That's going to be a pretty big challenge. Philadelphia is just a pretty well put together team. The way they did the free agency last year, and I'm going to talk about that in the portal conversation too, but the free agency last year, they added a running back, right? Just a guy out of New York, Saquon Barkley, just an average guy who got 2,000 yards this year. And he's got a quarterback who can run and throw the ball pretty well, and that was the missing piece. They got one of the best offensive lines in football. I don't know who's going to be able to take them down. That doesn't mean that they're going to win the Super Bowl, but I'll tell you what, I think Philadelphia just is waiting and has the opportunity now in their own division, their own conference, their own everything. You've got Washington. Washington's not going to back down from anybody. And so far, Jaden Daniels has had ice in his veins. He doesn't look scared. He doesn't look confused. He looks like a guy who's ready to get to the Super Bowl. So that's a tougher call. I'll go out on a limb and say this: Washington wins, and I think both visiting teams are going to win. I think Buffalo wins as well. That should be pretty fun, and that could be the Super Bowl. I'll be probably at my house hosting a party because I just don't like crowds. It's fun to be there. It's fun to say you were there and all the rest of it. But man, there's a lot of nightmares that go along with being at a Super Bowl and all the credentials and all of this and all of that. It gets to be a lot. I got one last one for you, Mark. It's really short, but I think it's kind of fun. Now, the NCAA allowed the college players to be able to have a portal. They can jump from school to school to school. that's their version of free agency, right? So here's what somebody put up yesterday, and it was sent to me. And so I just figured you probably didn't see this. I did repost it, but I wanted to throw this one out to you. And I like to call it portal missionaries. These guys who are going out, they're guns for hire, they're Bon Jovi. I mean, they're whatever you want to do, but these guys are guns for hire, right? So in the game the other day, a former Kansas State quarterback was throwing a touchdown to a former Ole Miss running back for Ohio State. Who was defending that? Well, it was a Wake Forest corner throwing to an FIU wideout after beating Texas, led by Ohio State's quarterback from the previous couple seasons ago, throwing to a Houston wideout. It's gotten so complex that these guys are jumping from one year to another to a different team. And now you're throwing to players that played at some school on the West Coast, somewhere in the Pac-12, somewhere wherever. But that's what college football has become. By the way, Quinn Ewers is the guy that is at Texas. He started at Ohio State, if you guys didn't know. But anyway, that's where he started. Then he's at Texas. And then the Kansas State quarterback goes to Ohio State. I mean, it's just a big puzzle piece going everywhere. Is that good or bad, though? I mean, you're a good fan, so I ask you, is that a good or a bad thing that in college football, these guys can literally just jump anytime they want, when the portals are open? They can jump anytime they want during that year and make another move because they're not happy where they are. Is that good?
I don't think it's good for the sport. I don't think it's good for the teams. I don't think it's good for the fans. It's great for the players to have maximum optionality, but I don't know how you build a cohesive team that lasts. I mean, as it is, you only have these guys for 4 years if you're lucky, and then they stay with the same school. But I can't imagine that it's a good thing in terms of building a sense of team and family if these guys are just bouncing from one place to the next. So I think net it's probably bad for college football.
They've got to do two things. They've got to figure out a way to have some sort of a cap. And people have given me criticism about this, but NIL, because at some point, if Ohio State has $25 million in NIL money and Minnesota's got $5 million, that doesn't seem right. Now you could say, well, but the generosity of our guys are different than yours. Yeah, I get it, but I still don't know that I think that's right. I think there should be a cap. I think caps make a lot of sense in a lot of different ways. So that's one. I think the portal probably needs a little tweaking too. I mean, maybe there's a number of times you can enter the portal. But there are guys out there, Mark, believe it or not, they go from team to team to team for 4 years. They get that quote unquote signing bonus to go there through NIL, and it's just changed the game. So I think that I don't think it's a bad thing that players get paid. I don't think it's a bad thing that you can jump to a different school. I just don't know that it makes sense that you can do it every single year for 5 years of football or basketball or whatever sport it is. That's the part that bothers me.
Yep, I don't disagree. And Pete, before we sign off, just a little shameless publicity. I want to remind viewers that we are still offering, and tickets are still available for RebelCon 2025. That is, of course, March 22nd at the MGM Grand in Las Vegas. It is day 4 of 10X GrowthCon, hosted by our friend and business partner, Grant Cardone. Don't miss that. If you haven't gotten tickets yet, please scan that QR, go to the website, or call your sales rep and secure your tickets now. I will be back on the Rebel's Edge with you tomorrow, 1 p.m. Eastern time. I'm going to be, as I said, coming to you live from Cardone Studios. So I won't be dressed like a lumberjack. I'll probably be dressed in a more typical business attire that the audience is normally used to and accustomed to. And for those of you that are lucky enough to be subscribers and part of the Great Rebel Nation, we will see you on Friday at 1 p.m. Eastern for our weekly cocktail hour. And then I think John is back next week, Pete, because we are scheduled to speak at a couple of events in Miami during the continuation of Hedge Fund Week. It used to be just 1 week. Now it's 2 weeks. But we're going to be on stage at least one conference called Uncorrelated, put on by a couple of people that we've known for a long time. But at the Battlefin Conference this week, yesterday and today in Miami, that I could not attend because of my daughter's birthday. Shout out to her, turning 17 today, as terrifying as that may be. Yeah, we'll see you all tomorrow at 1 o'clock. Pete, it's always good to be on with you.
Great. Have a great one, Marc.
Thank you, sir.